Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only. And now that we've got that out of the way, let's zoom into the chart, shall we? So we've had another sideways and slightly down week since we last spoke. Nothing crazy going on, although based on the emotions on Twitter and YouTube, it's as if we've broken down to 20k already. So yeah. Let's zoom in and let's talk through then. So, as usual, we'll run through the trades since last week, and then we will look at what I'm looking at next. So, first and foremost, the first setup was actually another public setup. Okay, another public setup. So this is obviously zooming out. This is the range. Obviously, we've been talking about this low time frame range. Well, I say low time frame range. It's still quite a high time frame for quite a long time. Been going on. Let's just hide this a second so we can see it. Okay, and obviously, of the last 3 weeks, we've given you a swing failure pattern trade of, this high, which was this trade here, and then we also give you another swing failure pattern of this high here, okay? And what we were discussing on last week's video was, again, either the options were another high, another swing failure pattern, and again, I did say on that video, if you go back and watch it, that I wasn't a massive fan of that because it's becoming a little bit too easy to get these swing failure patterns because they just seem to be so consistent. Or, if we do start to move down, then we can start to look at this range EQ, okay? And where do we come into? Pretty much exactly, well, this range EQ. So if you caught that trade, then well done, you'll be sitting pretty right now, roughly what, 4 hour, give or take, after you've taken some profits off initially. So, great trade if you caught it. Obviously, the EQ, we were talking about this last week. The EQ effectively is the bull's last stand within this range. Okay, because it's the last volume cluster that we've got before we fill out all of this inefficient move. Okay, so if this wasn't to hold, then we'd be looking for a rather fast drop down towards these range lows. Okay, where the last of the volume is, which is effectively here. Okay. But in the end, it held up regardless of the outcome of last night's FOMC. It was really a non-event. The numbers were exactly as forecast. So yeah, nothing really crazy happened, even though everyone was expecting it to go nuts. And yeah, in the end, we just got the push up. And in the end, we actually filled out some single prints here. And I'll talk about that in a bit more detail when I look at the group stuff. Okay, so again, if you got that, well done. Another setup given. Sunday was fairly simple. So Sunday played out a little bit different to the normal Sundays that we have, because normally we have a sideways range on a Sunday, and then you look at coming into Monday, you either look at taking the lows or you look at taking the highs, obviously all dependent on how the weekend played out. But what we had on Sunday is we actually had a Sunday evening pump. Okay, so once again, we can see this on order flow, people were chasing this, people were going crazy, longing into this, aggressively longing into it, and in the end, come up into value area high. And as I'm coming into the Discord, I'm saying my Sunday evening thoughts, having a push up as I type this into value area high, which as you can see here, above this, and I'll be looking for Thursday's high to be taken / the monthly open region. Okay, so Thursday's high was this one here. Thursday's high, if we start to get above that, swing failure pattern there. So that were my two options, value area high or above Thursday's high into monthly open. Okay. In the end, couldn't get outside of value, again making these lower highs. Okay, just keeping the trend going down because locally we are in a downtrend. Okay, and in the end we couldn't push above. There was a short trigger for me. So in the end, 8.9R, did take profits at value area low, so it wasn't a full 8.9R, but obviously that's something that we were talking about in the group. And again, another nice trade. And where did we come into? Well, as we've already shown before, we came into that, where are we? It's in here, range EQ. Okay, so just nice and easy. You start to lose value area low, and then we start to look down. Okay, and then that brings us into them Monday, which Monday setup, where are we? Is effectively the same as the YouTube setup, apart from in a little bit more detail. So what I'm saying here on Monday when I'm coming into the group on my morning plans, I'm saying to the downside, if we lose value area low, which obviously is value area low here. We'd already had, before I'd done this update, we'd already had a little deviation of value area. Without a swing failure pattern, then I'd be looking back down towards 29.5. Not high confidence. Now, what's 29.5? Well, 29.5 is this small local range that we've got going on here. Okay? So this small local range, obviously, we had local range low, local range high, deviation, 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 deviation. Okay? But, as I'm saying to the team, it's not a high confidence level. I would prefer the 28.8k daily naked point of control, which is this level down here. And why would I prefer that? Well, quite simply, because that's also where the range EQ was. Okay? So we had, where are we? Let's bring this back again. The range EQ. So we had the range EQ and the naked point of control overlapping one another. Okay? That gives us a high confluence trade setup because we've got more than one idea lining up, and this is what I am. I've talked about this time and time again. I'm a confluence trader. So that means I need many reasons on a chart to take a trade. Now, there's more reasons than this, but I'm not going to go through them in today's video. There is 3 more reasons on top of this, but there we go. So that's what we had in the end. Now, what had happened initially is, if we zoom into the 15-minute chart, is we had this wick down. Let's bring that back. We had this wick down, and then a really good buy up on the back of it. Okay? Now, I wasn't that convinced with that. It could have been the low, and I'd have been happy to miss out if it did move after that first low. But what I'm saying to the team at the time, as it stands now, if we start to head back towards those single prints, which are these single prints here, highlighted on this chart, okay, then we potentially had a double distribution day in play. But I'm saying here, the daily naked point of control at 28,874 was front run, so I wouldn't be surprised for another swipe and see if it holds. Okay, in the end, what happened? We did get that second swipe. There's your long trigger. Now, admittedly, I actually get a really bad long on this because I ended up entering higher up, a lot higher up. But we got the reaction, got the bounce up, and then all we did yesterday was just this slow grind up since then. Okay, a slow grind up. This price action is not the cleanest price action. There is a sideways range to trade within this, and I know some of the guys in the group were trading the sideways range, but it's not crystal clear price action. All we know is that this was an area that I was interested in, okay? So in the end, that was the trade, which was obviously the same as the public setup that we give. The only difference is I'm talking through this in real time with the guys, okay? Because obviously if we got no reaction there and it just rolled over, anyone that just placed a limit order there hoping for the best would have just got ruined, okay? So this is where all this, it's just all about having a plan and sticking to that plan. Right, before we get into what I'm looking at next, a couple of quick announcements to make. The first announcement, I mentioned this on Tuesday's video. This year, we are entering a team into the World Series of Trading competition with Bybit. Okay, as it stands, the competition prize pool is up to 8 million. Okay, and if you do want to join us, I'll leave a link down in the description, and we've got a team going. Now, anyone is free to join this team. I'm not going to restrict it. It's just a bit of fun, and we can all join in and have a chance at winning some of the top prizes, including obviously up to the 8 million. Plus, there's Lamborghinis, there's various other prizes, including Rolexes. So yeah, and if you do want to join our team, then it will also give you the ability to get 50% off our private group. Okay, and within our private group, what you've got is you've got access to over 28, or in fact 29 now, 29 individual modules from absolute beginner through to advanced trader. Okay, and it'll also give you access to our private Discord group where I share my high time frame and low time frame ideas. I share my daily trading plans 6 days a week, and as you can see, obviously, every time I come on YouTube, that's what we're talking through. So obviously, if you do want access to that and see where I'm taking trades, then normally it would cost you the grand old price of $59.95 Great British Pounds, or in dollar terms, that's roughly around $75. But if you do join our World Series of Trading team, again, it costs you nothing to enter. All you need to do is have $500 in your account and trade the minimum, which I think is $30,000 trading volume over the 20-day period. Then you can get a monthly membership for half price. Okay, so obviously if you do want to take advantage of that, then check out the post in our Discord. Okay, Discord links can be found down in the description, and they can also be found on our website right here. Okay, we've got a big post in the announcements channel to go through all that. Okay, Right, what are we looking at next? Well, surprise, surprise, it's the same plan because we've not had much update. So, first and foremost, obviously, we've got this low time frame range. Okay, although it's now dragging on quite a bit. Okay, so if we do start to move up and we get beyond, in fact, let's zoom in a little bit more, and we start to get beyond this level, which is effectively the value area low, we start getting back into value here, then we can look for a push up. And if we do get that push up, then these stops are all at risk. Okay, that's what I'll be targeting there for the liquidity wise. Okay, start to get above that, then we can start to look at value area high, and we can start to look at range highs once again. Okay, big focus on this. So if we do end up coming back up here and that holds, then you just continue to play the range, assuming that you get the reaction that you want from up here. If not, and it does continue up, then once again we're looking to take out the highs again. Okay, so if we do get this, comes up, takes out the highs, another swing failure pattern. Again, it'd be too easy in my opinion with that based on how many times it's happened in this range, but if it does give it, then I'll happily take that trade. Okay, what happens if it gets above that? Well, if it gets above that, we've discussed this before, you've got this level here to keep an eye on, which every man and his dog's got his eye on because there's liquidity above that. So if that does give a reaction, then you've got to trade. But if that doesn't give a reaction, then I'll be looking back into this old range. Okay, this old range here. Okay, and again with a key focus on the 38 to 40k region, this region here, this cluster that caused the breakdown. Okay, it's also the point of control of this small range. Okay, so that's what I'd have my eyes on there, roughly between 38 and 40k. I can't speak this morning. Okay, so that's what I'll be looking at to the upside. Okay, well, what happens if it starts to break down? Well, if it starts to break down and we do start to roll over, this low now is key in my opinion. As I said at the beginning of the video, start to lose this low and there's no volume here supporting this. So if we do lose this low, then we can be quite quickly looking back down to these range lows. Okay, and if we do come down to these range lows, then you'll be looking for that sign of strength before getting involved rather than just blindly longing it. Okay, if you don't get that sign of strength and you don't get an opportunity to get back in there, then you just let it roll over. And if it continues to roll over, then we're just back into the old range. Okay, the old macro range. We start to lose this, coming down here, lose this, then you're back to playing this old range. Okay, and once again, you got a key focus on the EQ and the overall range lows. Okay, if one of those gives a reaction, then you've potentially got a trade set up. If one of those doesn't give a reaction, then just let it run through. Okay, and that's it. That is literally it. There's nothing more to it. So to the upside, if we break out of this range, you've got this key high here, and then you've also got this zone here, obviously, which is the point of control zone. Okay, to the downside, lose this low, then I'm looking back down towards range lows locally, and if that doesn't hold, then we're potentially rolling over a little bit further. Either way, it's just level to level. I'm not in full bull mode, I'm not in full bear mode. Higher time frame, yeah, structure's up. Lower time frame, structure's down, but it's to be expected when we are trading within a sideways range. Okay, so you don't get FOMO at the top, you don't look for longs, just like you don't look for shorts at the bottom. Okay, and that's it. If you've learned something today, hit that like button. If you're not subscribed, consider subscribing, and don't forget to hit that bell notification so therefore you see these updates in real time, because that's crucial, because that's how you'd have got these trades here that we give. Okay, so until next time, gang, as you were, bye bye.